So this is a quick emergency update video about what's happening to the market because AI stocks are selling off and Bitcoin is selling off and it's sort of leading the way for this huge correction. Now, even if you're not interested in Bitcoin, I think you should still watch this video because Bitcoin tends to be a leading indicator for what's about to happen. And Bitcoin already started to go down before the rest of the market. And there's a couple of different theories of why this is happening, and each of them is extremely interesting. But arguably the most interesting one that I've seen is coming from this technical point of view. And again, credit to Benjamin Cowan for this. If you don't follow him, go check out his YouTube channel. It's fascinating. And one of the most interesting things I've learned from him is this. When the price of Bitcoin falls below something called the 50-week moving average, the bull cycle, aka the good days, are over. That 50-week average price for this cycle was roughly $103,000, which we crossed a couple weeks ago. And that was enough to cause a cascade of selling from investors that pay attention to this stuff because to them, the prophecy has sort of been fulfilled, right? This also happened while everything else was still kind of looking good. We got regulatory clarity, more Bitcoin treasury companies buying, positive news about Bitcoin legislation. We had Harvard University buy hundreds of millions of dollars worth of Bitcoin. Everything around Bitcoin was saying this thing should be going up, but it didn't. So the question is why, and how does this affect everything else? So in this video, I want to share with you all the super interesting theories about what's happening. And let me just start right here. I mentioned this one before, but I want to repeat it because in the world of economics, in the world of investing, there's two major forces that try to explain what's happening to the world. The first one is the technical force, technical analysis. The people that look at the chart of an investment, they draw some lines, and then they're able to guess what's going to happen to the market. Okay, that's force number one. The other force is the macro force. And this is the force that looks at the bigger picture of the world. Like, for example, what's happening geopolitically speaking? Is there a threat of war? Is there a change to politics? It looks at the central bank level, at the Fed, at the interest rates, monetary policy, things like that. But one of the biggest questions that we just can't answer still in the world of economics is, which of these two forces